Dollar Yen Daily Forecast June 8th, FXEmpire.com. The dollar yen pair rose again during the session on Thursday in reaction to the lack of easing mentioned by the Federal Reserve Chairman Ben Bernanke in front of the U.S. Congress. In fact, Mr. Bernanke even admitted that the effects of any new stimulus would be somewhat limited. He seemed to push the ball in the Congress's court and made it known that the Fed has done just about as much as it feels it can, at least with full effect. In other words, fiscal policy needs to be addressed, not just monetary. The pair is a fight between two central banks that are currently working against their currencies, and as a result, this is a classic race to the bottom. The quote-unquote winner is actually the country with the weakest currency in this game, and the idea is that exports will become much more competitive. The central banks have both been easing over time, with the Bank of Japan being the most recent one to act as it expanded its asset purchase program by a whopping 10 trillion yen. However, the Fed has been seen as possibly being forced to ease because of the situation in the European Union and the jobs markets in the United States. The fact is that Bernanke seemed to be fairly comfortable in his position of being very neutral at the moment during the session on Thursday, and the markets are probably going to have to come to grips with the idea of standing on their own for a bit. The pair did slam into the 79.50 to 80 resistance area, and so far it's held. With this pop, it's going to take something a little bit special to get through, and this could be a shorting opportunity if it weren't for the fact that the Bank of Japan is sitting lower and willing to intervene. Because of this, we personally are waiting to break the resistance to the upside, which we're calling, for lack of a better term, 80.50 or so. And on a daily close above that, we'd be willing to buy. As far as selling, yes, we see the setup, the possibility, the likelihood for that matter. But the BOJ is down there, and we just think that it's much simpler to trade other pairs and avoid central banks at all.